Silicon Valley Bank collapses, sending ripples through the financial markets. Charles Farrell. This was a $250 something stock like 36 hours ago. It's now a $0 stock. You don't see that very often. What fundamentally happened is a bank run, but in a very different way than many other bank runs have happened. Henry Fertoli. And the Fed is looking closely at the latest jobs report, which shows a resilient labor market. Plus, China brokers a deal between Iran and Saudi Arabia. It's Friday, March 10th. I'm Henry Fertoli for the Wall Street Journal. This is the PM edition of What's News, the top headlines and business stories that move the world today. The U.S. stocks tumbled as investors ran for safe havens today, unnerved by concerns about the health of the U.S. financial system and a still strong jobs report. The sell-off deep end at the regulators shut down Silicon Valley Bank, marking the largest bank failure in the U.S. since 2008. The Dow fell about 1%. The S&P 500 dropped over 1.5%, and the Nasdaq was down nearly 1.8%. Bond yields tumbled. We'll have more on SVB and what it means for the broader market in just a few minutes. Meanwhile, employers added 311,000 jobs to the economy in February, another sign of economic resiliency that could complicate the Federal Reserve's plan to cool growth by raising interest rates. The Labor Department also reported that the unemployment rate rose slightly to 3.6%. With the Fed aggressively raising interest rates to tame inflation, many economists had expected job gains would cool or even turn into losses by now. Fed Chair Jerome Powell indicated during congressional testimony this week that the central bank is keeping its options open on whether the next rate hike will be a quarter or a half percentage point. The Fed's next policy meeting is March 21st and 22nd. In international affairs, after 7 years of estrangement, Iran and Saudi Arabia have agreed to re-establish diplomatic ties in a deal brokered by China. Our Middle East correspondent Stephen Callan says China's involvement is significant. Stephen Callan. This suggests that there's a bit of a shift and that they're sort of dipping their toe into the diplomatic area and the very troublesome conflicts in the region that the United States has been involved with for decades. China now is trying its hand at that. So it's its first real foray into this area, and it does raise questions about the U.S. supremacy and influence in the region at a time when a lot of American allies in the region are questioning the U.S. security commitment, the U.S. interest, and staying power in the region, when it's seemingly more concerned with confronting Russia and Ukraine and competing with China. Henry Fertoli. As part of the agreement, Iran has pledged to halt attacks against Saudi Arabia, according to Saudi, Iranian, and U.S. officials. That includes attacks from Houthi rebels it backs in Yemen's civil war. Iran and Saudi Arabia agreed also to reopen their embassies and missions on each other's soil. Back in the U.S., on Capitol Hill, the House of Representatives voted 419-0 to approve a bill that would require the Biden administration to declassify intelligence related to potential links between the Wuhan Institute of Virology in China and the COVID-19 pandemic. The bill already passed the Senate by unanimous consent. The White House has not issued a formal position on the bill, which would give the Director of National Intelligence 90 days to declassify the information. China has disputed that the virus could have leaked from one of its labs. A spokeswoman for the Office of the Director of National Intelligence declined to comment, and we report exclusively that the FBI once bought mobile phone data that could track a person's location. That's according to a disclosure FBI Director Christopher Wray made to a Senate committee this week, though he said the FBI no longer engages in this practice. The Supreme Court has ruled that a warrant is required to track a phone through cell networks or to install a GPS tracking device on a car, but the massive amounts of data now available for sale offers a new source for such data, which raises legal questions about how and when the government should be permitted to buy it. Over the past several years, the use of purchased data for tracking has trickled down from the military to federal, state, and local police forces. The FBI declined to comment beyond Wray's remarks. Civil liberties groups and privacy activists have been sharply critical of such government purchases. Coming up, Silicon Valley Bank's collapse deepened a sell-off in bank stocks today, how the bank's failure is reverberating through the broader market, and whether it will continue to spread after the break. Today, Silicon Valley Bank, known as SVB, collapsed. It is the second largest bank in the U.S. by assets to fail after Washington Mutual. The collapse followed a run on deposits that doomed the tech-focused lenders' plans to raise fresh capital. The Federal Deposit Insurance Corp., or FDIC, said it had taken control of the bank via a new entity it created, and that all of the bank's deposits have been transferred to the new bank. Insured depositors will have access to their funds by Monday morning, according to the FDIC. So how did we get to this point, and what does it mean for the industry? Our financial editor, Charles Farrell, is here now to explain. Henry Fertoli. So Charles, this is the second biggest bank failure in U.S. history in terms of assets held. How has it affected the broader banking sector? Charles Farrell. Well, it certainly made people take notice. There has been a lot of reaction in the market today and yesterday. Yesterday, all of the banks sold off pretty heavily. We're seeing a little bit of a disparate reaction today. Some of the bigger banks, JP Morgan, chief among them, are up today. But some of those smaller banks, and particularly some of the regional banks, are still getting hit. So we're seeing a divergence of reactions from investors who are trying to figure out where this will go next. Henry Fertoli. So let's take a step back here. What happened, and how did it unravel so quickly? Charles Farrell. So the basic thing that happened is that the depositors of Silicon Valley Bank took their money out faster than Silicon Valley Bank could give them that money. That was a problem that became very acute this week, and the bank had to sell a bunch of securities stuff, assets that it had on its balance sheets, in order to raise money to pay the depositors back. And this sort of started a cycle where when you sell these things, they had to sell them at a loss, and they took a loss, and that made their position worse, and that makes more people want to take the money out. So it was sort of a self-fulfilling prophecy. They tried overnight last night and into this morning to raise fresh money. They were unable to do that, and there was really no choice but to say game over and over to the FDIC. The sudden collapse of SVB caught most investors off guard, and most Wall Street analysts also didn't see it coming either. Why was that? Charles Farrell. That's a great point. I mean, this was a $250 something stock like 36 hours ago. It's now a $0 stock. You don't see that very often. There are a couple of reasons for this, but none especially satisfying. The problem here, what fundamentally happened, is a bank run, but in a very different way than many other bank runs have happened. A lot of the sort of more familiar bank runs that people have in their heads is the bank does something bad. It invests in something bad, or there's a fraud, or it made a bunch of loans to people who couldn't pay them back. Expired, what do you think about this video? Do let us know in the comments section below. If you enjoyed this video and want to hear from us again, be sure to hit that subscribe button before you go.